Good afternoon and welcome to today's webinar, FinMar Content Essentials. My name is Craig Hall and I'm the owner and founder of Marketing Wiz. And Logan Burgess, who heads up our copywriting team and financial copywriting, will be joining us today. So Logan, thank you for jumping on the call and sharing a little insight into what you're seeing firms do as far as financial marketing, financial copywriting.
Absolutely, Craig. There's a lot of exciting things right now going on within the realm of financial copywriting and specifically as it relates to content. So really excited to be with you here today.
You've certainly heard me talk a lot about this, and I know all the clients and people that we're talking with or working with. And this quote's almost a little cliche at this point, but content is king. And I always bring it up because I can never stress enough the importance of content. And I know it's something you share, but content kind of fuels everything as far as our marketing goes. And one of the things that I'm excited about having you participate in today is you work with a lot of our clients and talk with the prospects and have worked in this industry for years now, and you've seen a lot of what different firms are doing and individual advisors are doing. And want to have you share a little bit about what you see some folks that are really working well and some things that maybe aren't working as well, because it's not always a perfect smooth transition into content.
Yeah, absolutely. And this quote from Bill Gates here, we're going on, this is nearly 20 years old at this point, but really it's more timely than ever in many senses because we need to be honest that there's a huge amount of competition out there within the RIA space, within the IBD space, and now with the evolution of the robo-advisor as well, there's a ton of competition in the marketplace, and in my mind, content is one of the things that can really differentiate a firm and make sure that their story is being told effectively and in a way that kind of sets them apart from the competition. So, I think Bill Gates hit the nail on the head here, back in 1996, but we're still seeing that here today. And there's kind of two camps, I guess, that I see a lot within the world of financial marketing content generation. There's firms out there that are kind of getting by. They're not growing AUM aggressively, and they're not doing a lot of content strategies, whether it be email or pay-per-click campaigns or even a simple newsletter. So that's kind of on one side of the field. On the other side of the field are these firms that are pretty aggressive with their content strategy, but in many cases, they're kind of wondering if they're seeing a return on this investment that they're putting into their business. And I guess, that's a big focus in my mind of kind of one of the things that I'd like to talk about today is how do we kind of bridge that gap to where we're being effective with getting our content out there, but we're doing it in a way that's going to provide a reasonable ROI to the firm and ultimately bring in new clients and bring in new advisors as well.
Yeah, I mean, you touched on this idea of differentiation, and I wanted us to just chat a little bit about this. This is something you and I talk about. We talk about it with our clients, but it underscores the landscape today in financial services in general, just this massive transfer of wealth. Everybody knows about it. We talk about this $30 trillion number and how it's moving from one generation to the next, and this is happening. This is an active transfer that's going on right now. You threw out the daily number to me once, and it really resonated as to the opportunity. What was it again? It was $2 billion a day.
Yeah, if you take this $30 trillion number that's going to be transferred, and this is happening over 40 years, so it's not happening immediately, but every single day, that means $2 billion is getting moved from the greatest generation down to Gen X and Gen Y investors.
And it's a significant number. And I wanted to stop here and just chat about this because I think it really underscores the value of differentiation and also the value of making investments in things like content and in our marketing. We understand the landscape. Today, we know that most of the firms are bringing in assets via the client referral channel. In last year's Schwab RIA benchmark report, it shows that 75% of firms are bringing assets in via that channel. Some firms more, some firms less, but that is definitely going to change as we move into the future and things happen and we start to have next generation investors start to come online more and more, and that wealth gets transferred down. And I think it's in that dilution of the client referral channel is where the content opportunities really pay off going forward.
Yeah, I think that's spot on. And if you look here in the bottom right on this chart here, obviously we don't have a crystal ball, but if you take into consideration the fact that 66% of these new clients, the Gen X and Gen Y individuals who are inheriting this $30 trillion, the reality is that 66% of them are going to be firing their parents' financial advisors. So, for firms out there, at first glance, obviously this looks like a major risk to business, but in another sense, and even maybe more so, is that there's a huge opportunity here to capture this money that's leaving existing firms and going elsewhere. And as you said, Craig, I think the best way to get in front of these dollars that are on the move in many ways is going to be content, specifically through digital channels, which we're going to talk about here in more detail.
I mean, that 66% is both a threat and an opportunity, and I think that opportunity is the one that we've really seen and been focusing in on. That it becomes an opportunity, to build more meaningful relationships with existing clients and look at increasing wallet share through client segmentation. But that same exercise of client segmentation really gives us opportunities to build a robust content marketing strategy that looks at an individual as they move through life, and as they kind of go from one phase to the next, to the next, to the next. And this idea of segmentation and personalization is very much what the digital world is about. We get information that we want. Look at Google and how Google became great and maintains itself as being the #1 search engine with 75 to 80% of the traffic. Because when we go to Google, we find the information we're looking for, and it's usually in the top 1 or 2 search results, because that information is 100% personalized to what we're looking for right now. I'd love for you to share some of your insights on how this works when it comes to building content, because there's just so much opportunity around leveraging the segmentation for our websites, newsletters, display ads, banner ads, product pieces, and I know you've got a lot of experience in this, so I'd love for you to just kind of share with the folks your insights on segmentation.
Yeah, absolutely. And I think, really kind of the important part of segmentation, or kind of why segmentation is becoming so prevalent, is because there's so many financial firms out there that are kind of utilizing one of 2 approaches. They're either kind of going, what I would call the shotgun method, where they develop a piece of content and they're sending it out to the masses, and they're hoping that the message or the product or the service that they're talking about within that piece of content is going to resonate with a few of the people that it reaches, but they're recognizing the fact that it's not really going to hit home with everybody. The flip side of that coin, is kind of this laser-like focus, where you're developing one piece of content and you're aggressively going after, let's call it 10 or 15% of your client base, and you're hoping to have a relatively high close rate or engagement rate with a relatively small pool of fish, let's call it in this example. And that's kind of the old way of thinking. When it comes to segmentation, which is something that you've really been driving, Craig, is to break down these clients and these prospects across different life stages of the financial journey. And you can see in the example here, we break it down within 5 specific life stages, going from somebody who's just getting started all the way to somebody who's living in retirement. And then we're building content which can resonate with each one of these individuals. And by being able to pinpoint this person, either by having an advisor identify them as somebody who's getting started, or having the user actually self-identify, which we're starting to do for a number of clients that we've been working with, we can really get a targeted message into the hand of each one of these individuals that's going to, at the end of the day, increase that close rate and increase client engagement for the prospects as well.
And when we were talking offline earlier this morning, you were chatting a little bit about just an example, and I loved your example around investment management. Just share with everybody listening how the topic of investment management on the face of things, which when it comes to marketing and institutionalized marketing, what we see a lot of firms do is write one message and send it to everybody across the spectrum. And I thought your example of investment management, just because everybody on the line and everybody listening to this in the on-demand version has an investment management piece, and most of their firms are built around that as a core.
Yeah, absolutely. And what it comes down to, I guess, is that, as you said, everybody's talking about investment management, but if a 35-year-old, let's say, gets a piece of material in their hand that's talking about legacy planning or estate planning, it's not going to move the needle in any capacity. And in the same regard, if you're talking to a 65-year-old client and you're sharing messages about paying down student debt or saving for a first home, it's not going to move the needle either. So investment management, I guess, is a classic example of where we can build pieces of content that are specifically relevant to a specific user or a specific persona, let's call it. And if we're able to deliver that message to them effectively, it's going to show that the firm not only is more interested in the individual, but more capable of resolving their specific need that they're encountering in this life stage.
What I find funny with this is that senior advisors, especially those folks with experience, they do this naturally. If they sat down with an individual in their late 60s, early 70s, no way would they start talking to them like they were a 35-year-old that's just getting started, and vice versa. But when it comes to our marketing, we definitely have tried to group it all together, and a lot of times that's probably to save money and resources and capacity. But this is so important, especially as we move on into how do we build marketing for firms, and how do we grow our marketing? And that's the key, is getting started in content is the baseline, but how do we grow it? And we grow it through three distinct phases, of which content fits into every single one of these, both in our strategy and how we get found. That's things like search, that's out on social media, that's in traditional channels when we have referrals, client referrals. That's how our firm gets found. But now what happens is client referrals, people do a quick search for the firm, and then whatever comes up is the first impression, which that flips the model. There was a day when the first impression was created by the advisor getting on the phone with that referral. Chances are today, most of those referrals start to create an impression of the firm long before an advisor ever engages them. So our content and our content strategy is just as relevant for supporting the client referral model as it is in growing our marketing in digital. And then how do we capture that information? How do we capture the people that are on the site, engage them? That's all through giving them personalized message. And we know that bringing in assets is all about how do we nurture and then ultimately convert those individuals. So this is where you really differentiate and have helped us refine our platform on how to blend this all together, because it's a lot of work, and you need a lot of content and you need a deep bench of content. So talk to us a little bit about how, explain what the difference is between creation versus curation, and then just share a little bit about experiences and how we've helped people blend the different strategies together to build an ongoing content strategy.
Yeah. So, I guess at its core, the difference between creation and curation, obviously creation is you have somebody on your team who is a writer or who is a financial analyst who can do the analysis. They can find interesting nuggets of information, and they can effectively convey that through the written word. So you're actually creating all this material in-house. That could be, a client and prospect campaign. It could be a webinar, quarterly newsletter, press releases, all the things that you see here on the right side of this slide. That all covers everything that would be created in-house. Curation is a relatively new concept within financial marketing, and we've really seen it, I would say, gain steam probably within the last 3 or 4 years in particular. And that's really this concept of the firm is not going to actually create all this material in-house, they're going to go out and they're going to find well-written, well-researched information that was created by reputable third parties, which could be, the Wall Street Journal, it could be, Goldman Sachs, it could be Kiplinger's, it could be whoever. They're going to find well-researched and reputable information, and they're going to share it in a way with clients that makes the firm look like a thought leader within the industry because they're out there and they're aware of the trends that are happening within the marketplace. So that's kind of the difference between creation and curation. And I would say that, one thing that we've been doing a lot more recently here for Marketing Wiz clients is basically leveraging these new platforms that allow you to find curated content like Vestorly or Broadridge, and you can really distribute that information in a couple quite powerful ways. One way I'm going to hit on in particular is through Broadridge. They basically provide pre-written pieces of analysis, commentary, and just general information pieces, many of which already come with a FINRA letter attached. And when a firm has a license to a service like Broadridge, you can take that material and then you can fine-tune it a little bit so that it still has a unique voice and it still looks like an original representation on the idea.
Yeah, I think what we're doing with Broadridge now is right in line with what a lot of the firms need. Is we're taking a piece of pre-built content and we're layering on a personal point of view, giving it a little bit of a unique flair, but all the research and anything that's related to statistics or data that's already been researched and approved, and as you say, the FINRA letters there. So it helps reduce the time and the time in compliance review as well. And then here I'm going to plug Vestorly, but Vestorly is a great tool that, as you said, it allows us to kind of quickly go out there and identify some trending articles, financial news, education, and across a Wall Street Journal, Kiplinger's, and all within a branded portal. So the firm has a branded portal, and when an individual reads it, all that data and relationship data is the firm's, but it allows for very quick posting into social medias, because you need a lot of content in a digital world. But there's no way that any firm has the capacity to write all the content originally, and that's where kind of this curation piece helps us blend this together to give a balance that keeps a steady stream of content going out into these different channels, and that is, I think, the most important piece of how we blend the two together and how any firm should really look at blending the firm together. But before we get into kind of wrapping up and sharing some recommendations on how firms get started, what is the one piece of content that a firm needs to write themselves that it really, they can hire a firm like ours to help them write it, but as far as the points of view and the unique, I guess, perspective that they bring, what is the one piece of content that needs to be 100% uniquely theirs?
I think that one piece of content would be the market commentary, whether that's on a weekly basis, a monthly basis. Some firms are even doing a short one on a daily basis. I think that, a lot of these pieces can be taken from curated sources like Vestorly or Broadridge, but at the end of the day, the market commentary and the perspective on the markets is really a firm's bread and butter. So, I would say the majority of this content, can be outsourced, but when it comes to that market commentary, I would put the energy there and, and ensure that it's a market commentary that you can be proud of and really represents, your firm's perspective on the markets, because in all likelihood, it could be quite a bit different than what we're seeing from, fund custodians or other RIAs and IBDs in the marketplace.
Well, you hit on something is if you've got to focus your attention anywhere, I think that's the challenge that every firm has in getting their marketing off the ground and keeping it off the ground. And it's really the content strategy is about keeping it off the ground. And you have limited amount of time, you have a limited amount of resources, advisors are busy, executives are busy. So where do you focus your time? And then you look to partners. Maybe you build a small internal team, and we have some clients that are doing that, but they're still looking to some external partners to help kind of organize it, get it through the distribution channels. But let's wrap this discussion up and just kind of use this as a recap for what we've talked about. And if you're looking to build a piece of content within any segment, the first thing we need to do is identify that target audience, whether that's an individual who's 35 years old looking to get started, whether it's somebody retiring soon and has 5 years to kind of get all their accounts and their tax strategy and figure out what role Social Security might play and Social Security income, or somebody that just retired and needs to make sure that they don't outlive their investment and that they need to make sure that they got a certain amount of their assets in growth funds, and they can't move it all to cash, and we all know that. But how we talk to them and that audience dictates kind of everything that starts next. And we didn't forget about compliance. You got an idea? This is our recommendation. Write it down, keep it simple, one page, send it over to compliance, get their feedback. How many times have we seen ideas get put through but never have been checked with compliance? And it can be demoralizing for everybody, and then nobody's having fun, and it falls apart. And we don't want that. And so we've learned, loop them in very easily. You might have a compliance team that's a one person. It might be easy. Some firms have a more complex compliance department. However your firm works, you got to get the compliance looped in very, very early. And then the rest, we find, kind of takes care of itself.
Yeah, absolutely, Craig. I think that's spot on as far as bringing the compliance team in early. And big shout out to the compliance individuals that we have on the call, because they make, everything that we do in financial marketing possible. But, from personal experience, especially when I was getting started, working at a number of firms, I'd have a great idea, and to your point, I wouldn't bring in compliance early enough, and it can really derail things. So I think that's spot on.
Well, thank you, Logan, for joining us, and I think there's going to be a lot more we're going to talk about, and we have on the calendar to do one on distribution and how all of this dovetails into identifying the channels in which you're going to distribute it through, because that matters too. The type of content, not only for the person, but for the distribution channel, is very important. But again,
Absolutely.
Thank you for joining us today on our FinMar Content Essentials, Curation versus Creation. Log on to our website, marketingwiz.co. You got any questions, feel free to give us a call or email either Logan or myself. We'd be happy to talk to you about how Marketing Wiz helps grow financial marketing within firms.